Thanks for coming back to the latest episode of the Credit Clubhouse. We are your one-stop shop for all things credit. Before we jump into our next episode, we have an exclusive offer for our listeners. If you're interested in attending any of our conferences throughout the year, we have a great deal for you. Just head to www.DealCatalyst.io, pick the event you want to attend, and enter the promo code CREDIT at checkout. This will give you 10% off any ticket to any conference. As always, don't forget to follow the show, rate us, and leave a review. We encourage your feedback. It'll help us make these episodes a better listen for you. And now, on to our next episode. Welcome back to our latest installment of the Credit Clubhouse. As always, I'm your host, Todd Anderson, Head of Content and Programming at DealCatalyst. Joining me today is Frank Benhamou, Risk Transfer Portfolio Manager at Cheyne Capital. Frank, how are you? Good to see you again, and thank you for your time.
Great, Todd. Thanks a lot for having me.
So I wanted to kick off. SRT has clearly been a popular term, especially in the last couple of years here in the U.S. Maybe give a bit of an update. Has the new administration in the U.S. has it kind of killed some of that momentum? It felt like we were kind of in this new era of SRT in the U.S. Maybe give an update as to kind of where that momentum is, and then we can jump into kind of more specifics around both the European and U.S. markets.
Yeah, I mean, look, I think you're right that Europe and US are a bit different in that respect. I think some of the things sometimes that create issue with the market is uncertainty. And what we had last year was uncertainty about Basel Endgame in the US in particular. And some issuers, I know for a fact, were so active and some others were actually withholding from issuing just because they wanted to be a bit clearer on the Basel Endgame. Because some people assume that Basel Endgame was actually potentially a strong supporter of SRT issuance because it would increase capital charge. But sometimes what people forget is that with Basel Endgame, there was also a change of what is called the P factor in the securitization formula, which is a bit of a technical point to say that it was making capital benefit in securitization much less efficient. So to some extent, the fact that we don't know yet where Basel Endgame is going to be, but it sounds like it's been postponed indefinitely. And that fixes the problem of uncertainty. That fixes the problem of the P factor I was mentioning. And so I think we're seeing a lot of deal happening in the US. What happens though is that people had a bit of a romantic views on what the market of SRT could be in the US of, it's going to multiply by tenfold, and it's going to be this new incredible and massive market. It's not how these things work. It's going to grow steadily. It's going to take years to grow to be much, much, much bigger. But the US market being so big that even a few deals here and there sometimes actually impacts the whole market volume. In Europe, it's a bit different. To be fair, there hasn't been this type of doubt. European issuer, including UK and Canada, have been issuing steadily. Last year, we saw overall for the global SRT market an increase by 30% in terms of volume. And we are looking quite good in terms of issuance volume this year as well. So look, SRT just makes a lot of sense for banks just because it saves them capital, it makes their portfolio more, I would say, efficient from a return on equity capital point of view. It frees our risk limit. And so for a number of all these benefits, we are quite positive. So to answer your kind of initial question, momentum, yes, we think there's a lot of momentum. I can just see how many conferences, as you know, or how many articles in the press we see on SRT every day to see that momentum. And one last anecdote about this is, I've been in that industry for a long time. Many, many years ago, many people have no idea what SRT stands for. I think it's very rare these days when I go to a meeting and people don't even know what it is. Even if they are not particularly active in the industry. So I think we've come a long way in terms of educating the market about this product.
So in terms of the differences between the US and Europe, what are some of those key differences? And also, is SRT a product or a trade that's used in the Middle East, Asia? Like, have other parts of the world started to participate and come to this market? What does it look like beyond just obviously UK, Europe, and the US?
Yeah, I mean, historically, it has been a very strongly positioned in EU and the UK. Canada came to it very strongly as well a few years ago. And now we're seeing also in Europe, East Europe, so Poland came quite strongly as well. We think it's it's disseminating progressively, like even in Czech Republic and Bulgaria and some other kind of like East European country. So we're seeing definitely that expansion of the asset class. The US has been picking up as we've talked about recently. Now, in Asia, we haven't seen that much. I think there has been some exception in Japan, but it's pretty rare. But I want to say Asia in general is not very big in structured product or securitization in general. Yes, they have a market, but it's nowhere near the kind of like type of scale that you see in Europe and in the US. So for some reason, I think that the whole product of securitization, structured credit is, and SRT as a result hasn't really taking place there that much. What is interesting though is that we have seen in the last few years a few transactions done as well in kind of like Africa or South America with the help of multilateral development banks. And so sometimes the challenge for investors is to go to do this transaction directly with bank based on this jurisdiction because of maybe a weaker legal or regulatory framework. Uh, but that can be actually solved if you have a multilateral development bank that sit in the middle and fix or take certain of the cross-jurisdictional risk. And so it's going to be interesting to see whether that continue as a trend. I mean, right now it has been only a few transactions, but it's definitely something that the market is looking at. Maybe the last one I would talk about is Australia. Um, Australia, the Australian bank are extremely in favor, I would say, of doing SRT. But right now they are prevented by their regulator who doesn't let them get any capital benefit. So the Australian regulator hasn't like provided any regulatory framework for SRT in that country, at least yet. I think there are discussions and so on. And so we have to see how that develops. But my sense overall is we're going to continue that geographical expansion. As usual, it takes time because this trade takes time to put together. So it's not something that's happening tomorrow, but it's definitely like a trend toward that.
So just before we jump into maybe the details of what motivations are of issuers and investors, maybe a last point on Basel Endgame. I mean, um, do you think the indefinite nature of it in the US is something that will continue? Do you think we'll get some resolution on it? Or is that limbo just gonna kind of you know uh continue to be there in the market, and it's really not going to impact the market that much? I mean, it feels like we're in a constant state of limbo regarding the regulatory, at least the US part of the regulation.
Yes, on the US part, I would say in Europe, just to be clear, I think the regulatory framework is pretty clear. There are certain things that need to be refined, but it's way more advanced than in the US. Um, you're right. Look, we're in a state of limbo. It's the odd thing is that I don't think the current administration has effectively said explicitly one way or the other what may happen. Uh, um, but what is clear is I think the banking sector anticipate revision at the very least to Basel Endgame. So either Basel Endgame doesn't happen, or if it happens, the general view is that there will be a reduction in a kind of like a GSIB surcharge, and there will be a modification to the supplementary leverage ratio that was considered. And so whether it doesn't happen or it happen in a much lighter version. And I think the market is okay with it, and to take the view that what's going to happen and carry on, and that it's probably going to be a multi-year exercise anyway. What is interesting as well is that the US stance now is influencing other jurisdictions because the Bank of England, for example, had delayed its Basel 3.1 implementation to January 2027 because of the US delay and to make sure that they were not creating something that was making the UK non-competitive. And similarly, the EU has postponed certain Basel components. So it's quite interesting to see that depending on where the US end up on Basel Endgame and the element around competitiveness between jurisdiction, what the impact is going to be on EU, UK, maybe Canada.
So you've been, involved in the SRT market for quite some time. Formerly at Barclays and helping to run their Colonnade program. Now at Cheyne. What are some of the key differences when you think about the roles and motivations in an SRT trade? Maybe from a high level, and then we can kind of dig into specific motivations around why banks issue these. Is it only capital relief and whatnot? But curious to kind of, since you've sat in a couple of seats,
Yeah.
how different is the view from either of those seats?
Yeah, I mean, to be fair, I like very much my position of having been on both seats and kind of like having a 360 view. Sometimes I joke that when I meet some investors, very often they're like, "Oh, you were on the other side, so why do you think of your competitor because they were your clients?" And so, which is kind of like, I guess I'm one of the rare people who can answer that question, but I always try to be very nice for whoever is listening. Um, but look, I think it's quite different, right? So when you're on the bank side, just in terms of my own role, you're more on in terms of the product, you're more on the kind of like product construction, right? You have to set up the whole SRT platform. So I was there and co-leading the platform at Barclays and setting it up from the ground up. And so it's a different work in terms of thinking from a legal, tax, regulatory standpoint, how you do things and build this platform. When you're an investor, you're more like on the receiving end for SRT of the bank giving you the trade they would like to do. So I would say you're not involved in the initial kind of like brainstorming phase because it comes once they've come up with the structure that they like. However, because I've been on both seats, I'm definitely, I think, better equipped to kind of like challenge and negotiate certain things because I kind of like know why certain things are being done in a certain way. But it's a bit of a different approach. The other thing is banks, without going too much into the motivation yet, but banks do this transaction for capital purposes. So they think about how do we build a portfolio for maximum capital reduction? How do we price this transaction for the most efficient return on equity capital point of view? When you're an investor, you don't really think about this thing. It's not about capital, it's about risk. So you
Yeah.
think, so for me, it's more as an investor is, okay, what do I think in terms of risk of the portfolio? How would I tweak it? And I also want to price it based on risk. So you have almost like a different pricing methodology between investor and the bank, because the banks think about capital, we think about risk, and so that's quite different. And maybe one last thing that which is worth flagging is obviously my interaction are quite different in the sense that when I was at Barclays, I obviously would talk. I was also advising some banks on doing SRT, so I was talking to a lot of banks, but also talking to a lot of our investors at the time. Now I'm kind of like still talking to the banks, but on the other side, but I'm also talking to our own investor, i.e. the LPs invest in our fund,
Yeah.
to explain the strategy, etc., which is kind of like really a bit of a part that is very different from a bank, because in a bank, very often you're exposed to very institutionals like big insurance, big hedge fund, or big asset manager, etc. When you kind of like talk to LP, I mean, sometimes it's pension, it can be a sovereign wealth fund, but it can be family offices, and so you have much more a wider spectrum of different type of institution, which definitely make it quite interesting.
So from the bank issuer point of view, is the trade, essentially solely focused on getting capital relief, or are there other motivations that a bank can use, and does it does it matter, or does that motivation change if I'm a large bank, Bank of America, JP Morgan, to, there's been some smaller banks here in the US, Texas Capital and others who've done some of these transactions. I mean, are the motivations the same and it's regulatory relief and that's the sole motivation, or is there kind of different motivations depending on who the bank might be and the size they might be?
Yeah, I mean, so it's actually not so much sometimes the size, but the jurisdiction. And for example, the US have a slightly different motivation or approach at time than in Europe. So in Europe, UK, Canada, we say historically the main motivation have been two things: reduction of capital and improvement on the return on equity, right? That flows from that. And the second has been managing risk limit. So they are maxed out on certain credit limits in certain part of their lending, and they want to free that. Interestingly, the main motivation has never been pure risk, meaning, oh, I don't like that portfolio, I would like to give it to an investor. No, they actually like their portfolio. They like the quality of the portfolio. What they want is more to make it more efficient in terms of risk limit and capital. But they have also other benefits. So SRT feed into the bank regulatory stress test, so that help. It mitigate accounting impairment, whether IFRS 9 or CECL in the US. It's actually a real credit hedge. I mean, at the end of the day, yes, there is loss on your portfolio. You get paid for it, you get covered for it. So that's kind of like nice. And the last thing is a lot of the trade, the cash sit with the bank. And so that also provides funding to the bank. Now, I said when I started, there's a bit of difference sometimes in the US because in the US, this motivation all exists. But sometimes you also see certain trades that are done for much more driven for risk reason, where the bank actually likes their portfolio, but they want to show that some of the riskiest part of their lending, they can also recycle and kind of like reduce. And so the motivation can be a tad different in the US depending on the transaction. Again, it's always trade by trade. I would also say one of the big difference between US and Europe is regulation. We've touched upon it, but regulation in a way that it impacts the portfolio the bank choose. So for example, very often in the US, you might see trade on auto loans or investment grade corporate loans. And the investment grade corporate loans, for example, pure investment grade corporate loans is quite rare in Europe. But the reason is because in the US, the capital consumption for some banks on investment grade or high yield portfolio is very close or the same. And so as a result, the bank is more incentivized to use investment grade loans because they get a better coupon for the same capital relief, which is not the case in Europe. So you also see different type of trade based on the region, mostly because of how the capital charge plays for the different institution.
If I'm a bank and I've yet to do a trade, I'm interested in. I see, obviously the last couple of years, I've seen a lot of news stories on it. There's been more events on it. Maybe I've gone to some of these events and I'm starting to understand, the trade a bit more. But we still have not participated at all. From an infrastructure standpoint, like what would a bank need to do to go from I'm interested in participating in the SRT market to beginning to look at, hey, how does the trade work? Do I need to hire the right people? Do we have the right infrastructure here? Like, what did you do essentially at Barclays? And maybe that might differ today, given that there's been advancements in the space. But maybe like a quick tutorial on what would a bank do to
Yeah.
begin to participate here.
Yeah, I mean, banks and have a lot of things to do, right? To get ready. And so typically the first transaction take 9 to 12 months. And so that's why I was, making a comment earlier and say people had a bit of a romantic view of the US kind of like making massive issuance tomorrow, just because that is missing the fact that these trades are sophisticated, require a lot of resources. And so it takes time. You cannot do them tomorrow. You need to prepare for them. And that also means that you're not going to do them when there is a credit crisis, right? Because it'll be too late. You need to have your platform up and running. So my advice for all banks has always been, you should build that platform now. maybe you don't need it that much and you'll just do small trades. But building it will make it so that whenever you want to do more, you'll be ready for it, as opposed to have to wait 9 or 12 months. Now, in terms of infrastructure, what do you need? Well, there's a number of things that needs to happen. The first thing is internal governance, right? How do you decide how much capital or whatever metric you want to use, and how much size you want to do every year, what type of trade you want to do? And that generally involves also, if you're a first-time issuer, you want to have a lengthy discussion with your regulator about it, just to let them know it's coming. You have to keep in mind that, at least in Europe and in the UK, every transaction is individually approved by the regulator. So it's one of the rare industry where there is a a much higher level of scrutiny, in the sense like it's not, you just don't have just general rules. It's like every trade is approved individually.
So it's not
And
like you work with the regulator on trade 1, and then you can do trades 2, 3, 4, 5, 6, 7. Every trade needs to be in conjunction with the regulator.
correct. And in Canada, it's less the case. In the US, it's a bit less the case, but their regulators still expect you have some visibility on what you're doing. And why is that? Is because the regulator generally wants to make sure that you say you've done an SRT, which stands for significant risk transfer. So they want to make sure you actually transfer the risk, meaning you haven't done some sort of trade where the risk come back to you, the bank, for some reason. And so that's why you have all these rules to say, like, guys, we're going to give you a lot of capital relief, but the risk need to be really transferred. It doesn't come back to you no matter what.
Yeah.
So that's the first part, which is internal discussion, governance, discussion with the regulator, setup also of which team is going to do what, right? And very often in the first trade, it's not uncommon for a bank to take an advisor, right? Whether another bank or a dedicated advisory firm to help you. And I think it's probably healthy to do that. The second element in terms of data is collecting historical data about your portfolio, the performance of the lending, how you originate, how you work out things, because investor will be buying into the bank's origination and management platform, and so they need to understand how the bank works. And so there's a lot of things to do around collecting historical data, sometimes like 15 years, over a 15 years period down to the GFC. So that's quite important. And then you have to negotiate the legal documentation. Again, that can be done with the help of your advisor and your legal counsel. But then you need to have infrastructure for two other things, which is one, build system to feed the capital relief internally, right? You want to make sure that you're capturing what's the edge and where the capital relief goes. Another system to do the replenishment. If you have a replenishment period, how you're going to select the asset. Most of the time, this is an automated process. People don't do that manually. And the last bit is you have to do reporting to investors. So you expect typically monthly reporting, and you need to say in your reporting how the portfolio has evolved, what are the replenishments you've done, how things have changed. In Europe in particular, you have some very lengthy, detailed prescribed reporting forms that we all hope will be simplified at some point. So yes, so that's why I said you need 9 to 12 months. You need to be kind of like a little bit focused, and yes, there is an internal cost in terms of like money and resources to set it up. One of the positive things I find when banks do an SRT as well as any securitization is they get much better out of it, because generally when a bank starts, the bank realize that its data is a bit partial, doesn't have like always great data, or doesn't capture all the right information. But the fact that the bank has to provide reporting to investor, and investor read it and may challenge some discrepancies and so on, make it so such that the bank in the end up improving its all internal processes to support the reporting, and that actually makes the banks better.
I mean, I'm always curious to know, like, why wouldn't most banks look to do that, or at least have this set up, and in times of stress they don't have to worry about that 9 or 12 months. Like it just seems like there should be more banks doing this, and maybe there are a ton of banks and it's just they haven't done a lot of deals, but from my perspective, it just seems like a natural part of the bank that should be set up. But is that the case, or is it kind of refined to pockets
No,
of different size banks?
look, I agree with you completely. I think we're seeing new issuer coming every year. So banks are getting it, right? But to my earlier point is for me, it is a natural thing for all banks to do and to build it because if COVID number two hit or whatever new
Yeah.
crisis hit or whatever stress hit or whether that's a tariff or something else, it'll be too late for the bank to try to set up something in emergency. And so doing it now when things are fine is kind of like a bit their insurance. And yes, it can take a bit of time, it costs a bit of money, but it's actually it can be very, very helpful.
So, you mentioned asset classes, corporate loans, autos. Um, is there a typical asset class here? Is European asset classes included in these transactions differ from the US? And last year I was hearing all these, esoteric asset classes beginning to be considered. I don't know if that trend has continued, but what does the asset class look like in terms of the loans that ultimately
Yeah.
underpin these deals?
Well, I mean, I think SRT still remain predominantly corporate based. So I think you have half of the market that is probably mid to large corporate, 15% or so that is probably SME loans. So the two together, really, you kind of like have a two-third that is corporate. And then you have the last third that is a mix of different asset classes. So that can be mortgages, that can be auto loan, CRE, infrastructure, trade finance, subscription line, and so on. So yes, you do have some esoteric trade from time to time. I don't think they're a trend per se. I think it's kind of like a few one-offs here and there. There's definitely a willingness for bank to expand the technology of SRT to as many portfolio as they can. It's just like the corporate is just easier to do for a number of reasons. But we are seeing that last third that I was mentioning of a mix of different asset class growing over time and being more important. So yes, that's going to continue. Um, but I'm not sure. I think there will be so many esoteric trades such that they would take like 50% of the market in the future. I doubt
Got it.
it, but definitely we'll see more of them.
So, now flipping over to the investor side, when these deals are done, maybe from a percentage point of view, I mean, are these bilateral trades, one investor, one bank? I mean, maybe that is the case with super large investors. Are most of these syndicated, and how does Cheney participate? Maybe in both sides, bilateral and syndicated. Like, what does the deal look like from an investor point of view?
Yeah, I mean, so you have a bit of everything. I would say like, you have some widely syndicated deal, but they actually tend to be a little bit rare because most of the time for you to have a widely syndicated deal for the bank needs to be a very frequent issuer, very active in the market, having a syndication desk within its investment bank and so on. And so you end up actually maybe it's a handful, even less, of banks that actually do widely syndicated deals. The vast majority of deals remain club
Got it.
and bilateral. I think that's definitely the case. And so, from our standpoint, look, we assess trade based on their value. We have done more, I would say, kind of like on the less syndicated side of things, but ultimately for us, it's all about whether the trades stack up on its own and whether you can build that relationship and having that discussion with the bank about defining the right term and agreeing the right term on the transaction and that you are paid appropriately for the risk you're taking. So it's one of the things in the SRT market is sometimes, people ask me, what is a typical price? Or what are the typical terms? And in reality, it's a range. you have different type of portfolio. Even if I say corporate portfolio, some will be leverage loans, some will be investment grade, some will be a mix of the two, some will be focused in a specific country, some will be global. So every trade has its nuances. And so you never have like kind of like a rule that say immediately yes or no. You need to look at the whole package, the bank, the portfolio, the structure, and kind of like decide whether that makes sense or not.
Especially last year, there seemed to be a lot of new investor interest in the space. A lot of new participants. Did that, kind of tilt the market and imbalance it in terms of too much money chasing too few deals? I think someone last year commented to me that like all the power has gone back to the banks in terms of terms and setting those terms. Has some of that rebalanced given that the market maybe has lost a little bit of that, exuberance or romanticism, as you said? Kind of what does it look like today in terms of the number of investors and investor interest, and kind of how that helps with deal terms and spreads and whatnot?
Yeah, I mean, so we have seen, you're right, a number of new investors a year ago or so, definitely. Um, I don't think that's so much the case anymore, in the sense like I don't think there has been many new investors recently, at least I can think of. So the investor crowd, I think, have stabilized, and to some extent, some of the new investors actually backtracked, some of them, and went back because I think there was an element around SRT being very kind of like popular and poster
Yeah.
child of new strategies and so on. Which is always surprising to me, having been there for a long time, thinking, well, I don't know why people think it's new, it's not new, but that was that. But I think that was also a consequence of like the CLO market sometimes drying down and some manager also looking for other things. Now, what is that done with the market? Look, I think the reality is there has been some spread tightening across the board, not specific to SRT, right? I think we've seen spread tightening on many different asset classes, and it'd be interesting, by the way, to see what happened now with the tariff discussion, because we already see widening on other asset classes as well, and
Yeah.
logically we should expect to see that happening for SRT as well. So the reality is the market has also been growing, right? So there has been new investor with capital, but fundamentally the market has grown by 30%. So the question is more whether the new issuance volume have absorbed the investor. And I think to some extent it's been okay for not all investors, but investors who have strong relationship with banks and have built this relationship over time. So there is a bit of like a negative term around some investors deemed to be a bit tourist, right? Which is kind of like, oh, it
Yep.
looks shiny and nice. Let's go and try to do some trade. If it doesn't work, we'll just leave and do something else. But I think what happened is banks see through it. And banks, what they are interested to do is to work with investors that are there for the long term. Of course, they want the best price possible, but they also want to have
Yeah.
investors that will be there if there is, a credit cycle turn, and where they can, develop an investor base, um, that is strong enough, and a little bit diversified as well from their standpoint. And so it's not uncommon for some of the new investors to struggle a little bit to actually have access to new deals just because they haven't built this relationship. And also sometimes the challenge is they are facing investor like us, for example, who have a dedicated team, dedicated fund strategies, and there are others like us that are I would say like dedicated investor to the
Yeah.
strategy. And it's definitely stronger, I believe, for us and similar investors when we have discussion with the bank about the fact we're here for the long term because we are set up for the long term.
Yeah.
And so I think some of the new investors have been struggling at times with that as well. But to answer your question on pricing, look, I think there has been some price tightening, but I think it has been a general trend. I'm sure that there is a bit of impact of this new investor. It's reversing a little bit now because of the volatility. So we have to see how it plays out. Ultimately, we still think the asset class makes a lot of sense.
What about LPs? Are they, how educated are the LPs, say, a few years ago to today? Have they kind of become more educated, more interested? Are there new LPs that, have kind of asked about this trade? And, are there key questions that these LPs or your LPs that might ask you, about this? Maybe, your LPs obviously know you guys quite well, but have you heard any new questions, or have you seen new LPs come to the table saying, "Hey, we're interested in your strategy"?
Yes, so I would say, to my earlier point is it's rare even for LP that they haven't heard about SRT. Now, I don't want to say that everyone always know what is an SRT, but it's becoming like people read it more in the news and so on, and you definitely have more interest. I would say there is also just a general trend toward private credit where SRT is, where you can see some investor thinking about, having a more balanced approach to private credit versus maybe say private equity or equity in general.
Yeah.
Um, so some of the questions they ask, I find most of the time is to understand how SRT compared to other asset classes. Because, when you put yourself in their shoes, they have to decide how they allocate between different type of product. And so a big part of our discussion most of the time is why SRT is actually compelling versus other asset classes. And then the kind of like people want to know about the market and some of the question you ask. I mean, I think it would be fair to say that quite a few of the question you ask actually could be questions they've asked as well. So definitely like the last one about kind of like tourist investors, etc. is come back quite a bit sometimes.
So we have just a couple minutes left. I like to end these conversations, a little bit lighter, and with some fun. So do you have a favorite sports team or a favorite hobby that that outside of your SRT expertise?
Yeah. Well, I have to say, I tend to. So I come from Marseille. So in Marseille in France is a big football city, and so I'm kind of like my DNA has been forced to support the Olympic of Marseille. But I have to say, I'm not. In reality, I'm not big on watching sports. I always thought that, and I'm sorry, I'm probably going to offend quite a few of the people here, but I kind of always thought uh, I'd rather do sports than watch sport. I'm kind of like, don't really get the whole let's spend hours watching sport rather than doing it. So I actually do a lot of running. I run, kind of like easily 4 or 5 times a week sometimes. I do a lot of like different type of training, etc. I find it very liberating and relaxing actually. So that's the type of thing I would do. But yeah, if you have to ask me which team, that's Marseille for sure. Otherwise, my family will have some problem with me.
What's the most exciting part of your job?
Well, what I like is the fact that it's very entrepreneurial in the sense that um, when you are, and that's quite different that, to come back to the difference when you're a bank versus like on the buy side is when I was at Barclays, it's obviously a very big institution. So you have a
Yeah.
lot of layers, a lot of committees, and whatever you want to do, there's always like 10 different teams you have to vet things from, etc. And to some extent, it is unfortunately the fate of many very large companies is it's struggle to allow creativity, to some extent and entrepreneurial spirit just because there's too many layers. What I have at Cheney, and I'm sure it is true for many buy-side institution, is it's more nimble type of structure, and so it's very entrepreneurial. You can decide way more kind of like how you want to run the business, what you want to focus on. You can develop your real business vision, how you want to communicate about it, etc. And that, I mean, for me, that has always been kind of like something that I really enjoy. I remember I was in university, I was doing entrepreneurial kind of like master amongst like applied mathematics, and so the kind of like entrepreneurial spirit has always been something that I really really loved. And so that's kind of like really what I find exciting about the job is that ability to push and decide more about things. The other thing that I really like about the SRT industry in particular is people. I find like it's a bit easy to say, but it's kind of like a nice industry. A lot of people are very nice. We have a lot of like conferences and drinks and things like that, and people are very on a friendly tone with each other. And of course, everyone has to do his own business and protect his interests, and that's fine. But there's a very kind of like human component to that industry that I found really enjoyable.
And then final question, one prediction for the next 12 months.
Prediction about the market, you mean? Well,
Yeah.
I think, look, my prediction is the market is going to continue to grow, and that is going to continue to grow. I think the US is going to continue to grow, but they are still, to our earlier discussion, trying to figure out what is the best trade for them to do. I do think we're going to see some spread widening, and that we're seeing like a bit of volatility now. There will be a bit of risk reassessment and a bit of spread widening, but ultimately, I do not think this will impact the market issuance because banks have a bit of buffer to absorb that spread widening and still do trade and for the trade to make sense for them.
Well, Frank, I really appreciate your time. You've been very generous here, and as always, I hope you're well, and thank you for your help with our SRT conference. You've been a great resource, and wish you well, and hopefully we'll talk again soon.
Thank you, Todd, and I wish you a lot of success as well. I mean, your conferences have been great, so I look forward to the next one.
Thank you. Thanks for coming back to the latest episode of the Credit Clubhouse. We are your one-stop shop for all things credit. We have an exclusive offer for our listeners. If you're interested in attending any of our conferences throughout the year, we have a great deal for you. Just head to www.DealCatalyst.io, pick the event you want to attend, and enter the promo code CREDIT at checkout. This will give you 10% off any ticket to any conference. As always, don't forget to follow the show, rate us, and leave a review.